I trade for just 60 to 90 minutes a day, and I'm consistently growing a small new trading account. In this video, I'm gonna break down to you my simple 1-minute scalping strategy that you can use to start and grow a trading account yourself. You'll see exactly how I found, entered, and managed each trade for a profit step by step. My strategy is all about trading reversals. I identify key levels on a 15-minute time frame, and then I zoom into a 1-minute time frame and use my multi-step entry checklist to enter into trades that I'm gonna walk you through. Now there's 5 key concepts to drawing these support and resistance levels, and I've actually created a free PDF that you can download in the description of this video that will drastically improve your chances of drawing correct levels that will also increase your chances of having this strategy be profitable for you as well. Now, the biggest key to looking for these reversals is always approaching it as what is the market telling me in terms of it reversing. Now this is a good example of a trade on a small account. I'm kind of doing a small account challenge right now, and this is on a small account. And so I'm risking $100 here, betting that the market is going to reverse off of this resistance level that I've drawn, and then, betting it to go probably kind of down here. And we'll talk about targets and why that's a good target later. But if it gets down there, that's a good 2-3 times my risk. And on a small account, risking $100, that is a nice profit. And so the first thing that I'm looking for, obviously, is that it comes up to that level first, right? That is the number one key thing to make reversal trading work, is the patience to just wait for the market to come to an extreme and key level. You can even see the market came here and reversed off of this little area right here. You can say, well, it bounced here, it bounced here, it bounced here. And so maybe it bounces here. Maybe I should have got that. Maybe you even look at hindsight and say, oh, I'll try and get that next time. But those don't work very often, and they're more likely to cause you to lose money in the long run. It's better to just sit out, kill that noise, and wait for the market to come to these extremes. And then when it's oversold or overbought in this case, you can capture on that strong reversal to the downside. And so the first key that I like to use is after it's kind of hit that level, again, you can see it's not quite in my zone, but again, it's so close, it's good enough. The first thing is making sure that uptrend is broken, because when you're counter trend trading, you don't want to go against a trend because, it might come up to a level here, but it's in an uptrend and it's just going to keep going, right? We don't know, these levels aren't going to hold every time. It's not just blindly sell or buy at these levels. And so that's kind of why I have this uptrend here, is you can see that we had strong bullish candlesticks here, and then it kind of started to break. It had a doji here, it had a bearish candle here, and then it made kind of another push higher. And so for me, that's good enough to say, hey, yeah, this strong kind of micro trend right here is broken. And you can see the market's kind of being quick with its reversals. And so I'm okay with thinking that that's a good enough trend break. Certain kind of trends, they'll need something else. But in this case, for this kind of very one-directional, unhealthy trend, it's good in terms of clearing that kind of need for a reversal break. And so after that, my next key that I like to look for is kind of a reversal pattern or reversal candlestick pattern. And so in this case, the market started to show some weakness here with this kind of doji here and this kind of red bar. And it broke that uptrend, and then it made these 2 candlesticks here, these bullish candlesticks, breaking this previous high. This high right here became a new one. And for me, that said, okay, it's still going higher, but as soon as this big bearish candlestick form right here, this big red one, that to me is showing it almost made a micro failed breakout. It made that kind of trap where it attempted to make a new high, and it did. It made a new high, but barely at all. It didn't make much before this big bearish candlestick came in. And so if I kind of zoom back in the recording and kind of show you that in real time, right now to speed this up a little, once this candlestick finishes forming, I think that's a good signal for me. And I want to get in right there at the low of that candle. So my thought is, okay, I want to get in when it kind of breaks the low of this candle, because to me that's a strong enough signal that it's likely going to reverse there. And so you can see initially it kind of starts to go against me and doesn't look great initially. But, you know, that's where when things reverse, sometimes they take a little while. The market won't always just reverse on a dime. A lot of times it'll come up like it did, kind of start to settle down and slow and lose some of that momentum and strength, and then it'll give it back up and start going. And so that's what I'm kind of looking for. And so once I entered in there, I moved my stop above this high, because the whole idea is if it comes up here and knocks me out, you know, I'm looking for that kind of quick reversal to fail. And I think if it comes up here, comes back down and keeps going higher, I think that's a stronger uptrend. It's had a healthy pullback if it does that, and then it keeps going higher, and you know, I want to get out. The idea is with trading is you take your stabs, they either work out really quickly and really well right away, or they just don't work out and you move on. If you're trying to force a trade in conditions where it's just not great and not working out, you're gonna lose money if you try and enter in the market over and over. And so once it kind of got going in my favor here, and again, this is on a small account, I think I'm risking, it honestly might be like $80 or $90, not even 100. But the idea is I moved my stop loss here to break even because, well, if you look at where we're at here, we had a news. This was just a news announcement. I'm trading the NASDAQ futures here. Again, you can kind of trade this on anything you want because you're just reading the candlesticks. But there was kind of a news announcement that made a big spike right here. And then from there, we've been in kind of this choppy range. And so my worry is here is I do think we can reverse off of here and push back down and kind of push back to here. We'll talk about that in a second. But I'm looking for, you know, that to reverse, right? I don't want to lose money if instead the market's just going to be in this mode where it kind of just sits here and goes in a sideways chop. I'm looking for kind of a little bit larger of a move where I, you know, risk a small amount and make a large amount. And so when it kind of had this initial move right here, and it could have reversed right here off of that big green candle, and I would like to get out at break even at that point. And so, you know, once it kind of did that, I moved to break even, and instead it kind of just had a little pullback, which is good actually in terms of the health of this move down. And then from there, once it starts to kind of make a new low, I actually moved my stop loss down here again to, again, capture some of those profits, because I'm thinking that this market is pretty tight. I think it's more likely that it kind of whips back and forth. And I'd rather get out with a small, decent size, little 1 times my risk, maybe 1.5 times my risk win, versus leaving it here and, you know, hoping a home run happens, because those do happen and I catch those, but you have to pick your spots, right? You don't always want to be managing the same way with your trades. And so here you can see that I've actually drawn a downtrend line here. And I think that's a really nice way to manage tendency because it looks like it's starting kind of to be in this little downtrend. And the second thing is, to this area. Now this isn't a major support level. It's not something I have on a larger time frame. That's why there's not really a zone drawing there. This is where you want to use as smaller targets for your trades though, because especially in a market like this where I don't think it's going to be a home run, I think it's more likely to bounce and reverse off of a micro support resistance level. Now I'm not necessarily taking my bets and trades off of those levels, but in terms of if I think the market's going to be pretty tight today and I want to just capture a nice little swing like this and then get out at a nice profit, I'm okay using that. And a lot of the times when the market has a big move like this, kind of like we were talking about earlier, that it's a big area where the market velocity off that area was really big, it's more likely that when the market comes back down there, it's gonna find a bounce. And it's gonna find some buyers and support. And this trade right here is going to dry up and slow down. And I wanna capture my profits here because I'm getting, you know, about 2.5 times my risk on this trade. And that is a great trade to just consistently make money and grow your trading account. And again, that's what you want to start out with. You don't want to be trying to get home runs, make a ton of money, make your small account grow over time. And in this, you can 10x this size. I have trades on my channel where this trade would be $2,000 and it's the exact same setup. And so actually at that point, you can see I had my stop loss down there because I was managing it pretty tight because we got down to this area and it closed out there and it actually started to reverse. And you can see it started to reverse off that level. Now, don't forget about that PDF of the 5 key concepts in the description of this video. And so just looking at right here, pause the video and kind of think about what patterns you're seeing that we just went over. There's a couple here that you can see. So I'm just gonna give a couple seconds, just pause it and just kind of see if you can see what these patterns are. And then from there, to kind of walk you through what I'm seeing is, we kind of have a big resistance level here, and the markets come up in, kind of just a methodical uptrend, right? And then all of a sudden, we have a massive move up, causing, in my mind, a big shift. This is out of nowhere. The trend was clearly just kind of chugging along, do its thing, and then boom, it has a big move. And so for me, that's a switch in what's going on, an overexhaustion usually. And so from there, it moves up, pulls back, has one more attempt higher here, and then kind of to zoom in on this area, looking at these candlesticks as well, is there's a 3-line strike pattern here. It kind of shows up a little funky, but it's pretty much just a couple of sideways candles, and then it slowly moves up, and then over this candlestick here, it moves up and reverses, and then the next candle, it just gives it back up. And so for me, I waited to see a couple candlesticks, how it responded. That's kind of the intricacies of getting in short and just playing these strategies over time. You'll kind of see how you like to play in a couple spots, but then I entered in on a trade there, put my stop loss above here because my thought is, hey, if it comes up here, I just want to get out. This is obviously a strong move. If it's going to keep going higher, it's going to go pretty quickly. Or if it reverses and gives back this move up I like, it's going to happen quickly as well, because these moves, they generally happen quickly. And so this is again on a small account. I'm risking about $100 here, maybe a little even under. I don't quite remember. But the big thing I'm looking for here is, zooming it forwards a bit, is I went to break even here once it kind of gets moving in my favor. And you can see I drew this support box, because my thing is, I'm thinking that it's gonna, a lot of the times, like we talked about earlier, with these targets or with these moves, a good target is it gives back this kind of overextension or overexhausted move. That happens a lot of the time. And once it kind of gives back there, then it's kind of, it's back more in equilibrium. And, for me, my edge is gone. I have a good understanding of how these move. I don't have a good understanding of how they move after, but that's okay, right? You only need 1 or 2 patterns to be consistently profitable trading. And so this is my pattern, right? And so for me, I liked the idea of scaling out of my trade. This is a little more advanced, but I, broke up my stop losses of saying, okay, I want to get out of, 3 out of 5 of my contracts right here if it decides to snap back quickly. And then I also want to just kind of give this other one a little more wiggle room if it's going to bounce here and then keep going lower. This can be a big switch in the overall trend. And so I want to give it a little room. As you can see, I moved it down there. I do kind of have a kind of mental stop in my head. Now I quickly moved it back, but you can see I'm trying to give it a couple of candlesticks of a pullback here. And then most likely I'll move it down once it kind of starts to reverse, or kind of gets to either 1x my risk. The idea is I want to give it some wiggle room, but I don't want to try and give it, give this whole swing back up. And so kind of it starts to reverse there. And so I'm going to move my stop down now, because this is kind of a little micro top. I think if it's going to make this little micro double top and keep going lower, that's a great spot for my stop, because if it breaks this, I think it's, it's kind of not doing what I'm looking for. And that's how I like to manage my trade, is if it's doing what I want. And so from there, it just kind of chopped around a little bit and looks like it was breaking lower here. And so it starts to break lower. I'm moving my stop down. And again, it's still kind of in this range you can see here. And this kind of looks like a little bit of a little mini fail breakout, you could even say. And I believe it knocks me out here. And so that trade still closed up at, I think two times my risk. Really good, profitable trade right there, which is, a great growth on a small account. Now, again, to remind you, just make sure to get that PDF in the link below with all these. It'll be really helpful for you to dive even more into technical analysis and reading candlesticks, which is crucial for trading this kind of style. Check out this video right here. I go even more in depth onto the nuts and bolts of how reading into the price movement of the market, and it will flush out these ideas and patterns even more for you.